we are gradually hollowing out our industrial base to maintain our kind of global dollar empire. But this has cumulative imbalances. We're constantly taking away from Michigan and Ohio and Pennsylvania and the Rust Belt and making it get the name Rust Belt. It's going then international, and then they're reinvesting their proceeds in U.S. stocks, U.S. bonds, private equity. So that's going back into New York, back into Silicon Valley. And so kind of the net result is we're taking out of the Midwest and we're sticking the value into the coasts. And so you get both domestic political issues, and then you get these kind of global big imbalances where China has all these massive surpluses, the U.S. has all these massive deficits, and other countries kind of sit somewhere in the middle. And that's kind of an artifact of the system that we've structured. And the challenge is that if you want to bring back some degree of manufacturing and industrial vibrancy, it generally comes with the cost of giving up some degree of the currency power that they have.
Why? Why does it? I mean, that's obviously Triffin's dilemma, which is the problem that we sort of get ourselves into. And so having to supply the world with dollars in exchange for giving those dollars for the goods that they bring in, I'm guessing that's what you're saying. But I mean, is that why the world needs the dollars? I mean, doesn't the Eurodollar system just create their own dollars now? Can't we just provide dollars another way? And then also maybe a better question, maybe that I'd like to ask specifically is like, sort of in a capitalist system, like the goal is to move to higher levels and sort of take care of those base needs and give those another emerging market. So like 100 years ago, we did do textiles here. Now Vietnam does. But we now make digital products. We make Facebook and social media platforms and financial products, and those get exported to the world, and the world imports those, and that doesn't show up in trade balance. Does it?
So two questions. One is actually it does. So there is a services component to trade balance. And our trade balance as reported includes services. We actually have a services surplus, to your point. And services can also include things like tourism. You know, if a place doesn't really export things, but everyone wants to go there to travel, and they bring currency with them and they spend in that economy, they're basically exporting tourism services, is the way to think about it. So the U.S. is exporting financial services, software services, tourism services, things like that. And that is taking away from some of our goods deficit, but we still have a net deficit even after that's considered. And it's pretty big. And to your point, like specialization matters. Like the trade is a net good because it allows different areas to focus. It only becomes an issue when it's not necessarily happening naturally. It's happening because of an artifact of basically an intentional system as designed. And two, there's usually real politics at some point that hits. There's national security interests that hit. And so, for example, when a pandemic hits and they're like, wait a second, we can't make ventilators. Yeah. Why can't we make ventilators? Right. Or semiconductors are super important. Why are all the semiconductors being made in like Taiwan and South Korea, right, for example? That becomes an issue. So people usually don't lose sleep over where shirts are made, but they do lose sleep over where complex machinery is made, especially if it's a handful of kind of places in the world. Yeah. So, and there's a weird thing you don't think about, like pharmaceutical components, medical dyes that are needed in like imaging, just little widgets here and there that our industry is just heavily reliant on. And if you do have some sort of trade embargo, you can have a national security issue and kind of shortages and things like that.
As we saw in 2020, to your point. And I'm bullish on tariffs for the most part, and I agree with you. They're strategic. They're not blanket. We're not trying to grow coconuts in the U.S., right? We want to import those types of things. And also, tariffs also work for protecting certain industries, especially allowing industries to grow. So, for example, bringing back some of these competitive things like microchips, for example, and doing some tariffs might make it more cost beneficial here. Also, in the U.S., we've sort of shot ourselves in the foot by doing a lot of environmental regulations against rare earth elements and certain minerals that we might need here, and bringing those things back just by loosening some of those political, I guess if you'll call them those political regulations against that. So I guess those are all important pieces. And I think if I looked at sort of the plan, it doesn't look like the goal was to bring sneakers and T-shirts back. That's like a media headline. I shouldn't probably repeat that. But I think maybe getting back to 15% manufacturing in the U.S., and then putting some of these tariffs would allow us to sort of develop some of these automation technologies that we need. Seems like a pretty good plan. At least that's what I was seeing.
Yeah, but Potentially, I think that the problem is that, so if you look at, for example, that Stephen Myron paper, so Stephen Myron is Trump's chair of the Council of Economic Advisors to the president, and he kind of outlined that the trade imbalance is directly tied to the currency issue, and that there is somewhat of a trade-off there. One of the challenges that I think the administration, as they're approaching it, is not really talking about that other side of it. They want to retain every single benefit of the dollar as the global reserve currency, but then they also want to fix the trade element, even though they're kind of tied at the hip.
Right.
And I think that's where they potentially run into frictions, because it's more like you're treating a series of symptoms rather than talking about the elephant in the room, which is kind of the root cause, because it's very wonky to talk about. It's not something like all the stuff I just said is terrible at a political rally. It's not, no one's gonna clap. It's not fun. It's not energizing. There's no enemy. It's like it's cumulative decisions that us and others have made collaboratively for decades.
Right.
Um, and so that's the challenge. And there's no kind of narrative political gain from saying we're actually being harmed by being the sole reserve currency now, that the downsides of it are kind of equal or exceeding the benefits of being it. Um, and it's a whole wonky subject to talk about. It's more about kind of we're in a more multipolar world now, and there are realities associated with that. But yeah, none of that carries political capital to bring up. And so it's a lot of the focus is on the tariff side, the trade side, but the challenge being that's only one side of the coin.
Yeah. And does that lead to something bigger that you see kind of being geared up, is maybe to change that structure of the monetary system?
We have seen that in elements of the administration. So going back to Stephen Myron, for example, he in his paper he literally talked about the potential of putting a fee on investing in U.S. assets by the foreign sector. Now, you wouldn't really think a politician or an advisor to a politician would think, "Hey, we want the world to invest less in our assets." But that's one side of the coin that's happening. The other side of basically a current account deficit is what we have is a capital account surplus. And by all these entities around the world owning U.S. assets, it overvalues the dollar and therefore makes it harder for us to compete on manufactured goods. And so to the extent that that's, become very extreme, there are elements in the administration that want to push back on that and say, well, how can we kind of maybe balance this out a little bit? But then that sort of focus on some of those bigger things doesn't necessarily make it up to things that Trump will say out loud, for example. So I think like any administration, there are kind of different factions within the administration. We saw this, for example, there was more of a free trade contingent within the administration and more of a protectionist and tariff contingent. And then similarly, you have a somewhat more academic bent within the administration, the Stephen Myrons, and then you have the other faction. So I think that's one of the challenges, is kind of seeing which side's winning at any given time. There was a similar dynamic in his prior term, but that was more of an establishment versus anti-establishment contingent. Whereas this term he put together, this administration's more it's more fully anti-establishment, but then there's still different factions within that.
Yeah. I guess what I was asking about is maybe some fundamental transformation of the system, getting away from the dollar being that reserve currency that's always forced to then export its manufacturing sector. So there's been hints, Luke Grahman talks about quite often, but hints about, revaluing gold, for example. Obviously, there's a strategic Bitcoin reserve bill put forth. And so maybe doing something to sort of get away from that pure fiat, U.S. Treasury dollar system and going back to something like a gold or a Bitcoin. Is that what you're talking about?
Well, yeah, that's what I mean by faction. So, for example, in Stephen Meyer's paper, he talked about how if what he's saying is basically ends up happening, it'd be beneficial for gold and cryptocurrencies, which would primarily be Bitcoin. He used the phrase cryptocurrencies, but basically gold and Bitcoin would benefit from this more neutral reserve asset type of system and a more multipolar system. Then you see a little bit of pushback from within the same administration because, for example, Trump would say that if there's an attempt to make a BRICS currency, he would stop it. Or try to, he would sanction it and things like that, even though that would actually kind of play into the Myron playbook to say, okay, let some of that, foreign trade happen in a different currency. Now, I think for separate reasons, a BRICS currency doesn't make sense. But basically, one of the potential paths for reshoring some of the higher end U.S. manufacturing is to say, look, if you want to do, if China wants to do trade, they're already the biggest trading partner with most countries. They could do more of it in their own currency. They can do more cross-border funding in their own currency.